Hi, I'm Dominic Picarda here for SpreadBet magazine, this month to take a look at the prospects for the US dollar Japanese yen exchange rate. Now, the US dollar has been locked in a downtrend against the Japanese yen for several years now. Back in the summer of 2007, just as the credit crunch was about to hit, $1 bought about 124 yen. But since then, it has collapsed to an all-time low of around 75 yen or so to the dollar. And just lately, the dollar has begun something of a comeback. It has surged in probably the most impressive style that we've seen for some years. And this is no accident. The Japanese authorities have deliberately tried to weaken the yen, whose strength in recent times has made life difficult for the country's many exporters, among other people. And the one of the things that makes this move up for the dollar against the yen so impressive is that it has taken the exchange rate above this purple shaded zone that you can see here. And this is the weekly Ichimoku cloud, which is a version of a moving average, which is very popular in Japan. It was invented in Japan. It's heavily used by Japanese traders, but also traders around the world who are trading in anything involving the yen or Japanese assets. You can see that quite a few times in the last few years, the dollar has tried to break significantly higher, but has been repelled by this weekly Ichimoku cloud. And in the past, it has been quite significant when the exchange rate has got back above its cloud. That was certainly the case here in 2005, where further good gains followed the initial break of the cloud, and we can go back further in time. In the year 2000, the yen strengthened significantly after breaking back. The dollar broke significantly higher after getting above its cloud here, and the same is true if we go back to 95 and the occasions before that. So potentially this is a very significant event. It bodes well for further gains in the dollar yen rate. This being the case, I think the recent rally, which has already taken us up to 84 or so in 84 yen, I think this could continue to over 90 and perhaps even to some shortly over 100 yen per dollar, which would be the strongest that we've seen it going right back into 2008 or so. In this environment, my trading strategy, obviously, I want to get long of this exchange rate. I want to buy dollars and sell yen, and the level I'm watching is this 21-day exponential moving average. And what I'd like to see is I'd like the price to come together with this line, maybe dip a little bit through it, and then start to rally again. And that for me would be a good way to get in on this and catch that next move up, which I'm currently expecting. Now, we obviously have to consider the risks as well. What could undermine the dollar's recovery against the yen? And what usually drives people to buy the yen is some sort of financial crisis, economic fears for in the global economy. And I would see at the moment, however, we're in a fairly bullish mode, and barring some blow up in the eurozone, then I think that this rally is probably well set to continue, at least maybe into early into the second part of this year. But we'll keep following this one in the weeks and months ahead.